Donald Trump making a bit of an interesting thing. I think he's probably one of the only guys that got the guts to do what he's doing, and I think that's a fair comment to make. He's obviously doing a lot of work trying to make the markets a little bit nervous, which they certainly are. And I think that's the state of play for this year, or certainly why Donald Trump is in power. And S&P jumped on Friday up 2.1%. Global trade wars intensifying. We know this. It's a game changer for investing. Easing tensions in terms of government shutdown. I really don't understand the fact that the US continues to push the envelope in terms of the government debt to GDP, which is incredibly high, and no one ever seems to address it. Donald Trump, I think, might, and as a result of addressing it, put the US into a recession. I don't think he's afraid, but he'll say, look, you've got to take the tough yards in order to gain. Remember, he's all about making America great again, and I think that, to me, is a signal for a lot more volatility. Have a little bit deeper dive. I think, obviously consumer sentiments, we said that's a problem. What about the US tariffs, and what will we see? And I think there's a lot of confusion about tariffs and why are they so bearish. But I think at the end of the day, what you've got to think about is that when you impose a tariff, it's the companies have to pay for it. So US companies have to pay for the tariff that is imposed. Then they have to decide whether or not they push it onto the consumer. They push it onto the consumer, that means higher prices. This has happened before, where the US has tried to impose trade restrictions and tariffs, and it's worked disastrously. And I think history is a pointing case for it. 1913, 1940, up to 20, and then obviously into the Depression. Not that we're saying that could happen, but we're just saying that tariffs do not work. And as a result of that, I think you can say, well, we've reached the high in equities for some time. We did mention in last week's report and the week before that we think US equities are under pressure. There's no real reason why all these markets will go back to record highs. That just doesn't have the fundamentals. And I think Trump's already ready to say, well, look, we've got to do the hard yards before we can win. And that will be his byline going forward as things start to deteriorate. Okay, so what do we think of the bearish case for equities? Why are we thinking this is now a trend? Rather than just a correction, and I think you've got to look. We've got a lot of volatility, and I think that to me is the problem, and that's uncertainty. The implementation of the tariffs over 10%, but it's less uncertainty as to how the market's going to react, which is the big problem. How is the market going to react? How are profits going to react? Companies going to react? And I think to me that's something that we don't know. And as a result of that, we're saying, well, okay, well, let's take some profit. There is nothing wrong with taking profit. Companies will still report, you still get some dividends, but you're going to lose a fair bit of capital. Now, thinking in terms of corrections, are we expecting another 10%? If it is another 10%, which I think is highly likely, that's a 20% correction from its highs, but you're still making money if you were investing sort of over the last, since COVID, basically. So if anything there, it's just a correction, which I think if you do get the right opportunity, start to buy back in. Okay, I think as a result of those tariffs, earnings pressure will be a key. So keep an eye on that. It's a tax on imported goods. So, that consumer will pay. So that at the end of the day, depending on what the corporate decides to do, then it's sort of, in a funny way, it's money going from the corporate world into the government. And you'll probably find that Trump will be using that to help reduce the deficit. But earnings pressure will be a theme going forward from here. I think also with the tariffs, you're going to have a massive disruption in supply chains because you don't know the order flow, you don't know a lot. So that in itself is going to create a little bit more of a hiccup. And I think that to me is an issue. Also, just remember the retaliatory measures that will be employed. People in other countries who we think, or particularly Australia, we thought we could, be a friend. There's no friends, according to Trump. These are the things. So I think people will start to say, well, I'm not going to buy American. And that, to me, just goes back to the corporate side and just goes back to the fact that the reason why these equity markets will continue. So retaliatory measures, I think, are there. We're going to see more of them as Trump continues to impose these tariffs. And I think if you look at it's really investor sentiment too, and it's also economic uncertainty. We have talked about that. Economic uncertainty, in my mind, is something that Yeah, people say, well, I'm not going to put my hands in my pockets and go and spend. I'm going to sit back and wait and see what happens, which is a fair call. No problems there. So I guess when we look at that, where do we think everything will go? And I think that's a general thing. So there are broader economic implications that are happening, and there's potential for stagflation. Stagflation is a slowing economy and with rising inflation. This is, I think, will be the picture going forward from here. We've already seen those inflationary projections moving higher. We've already seen what the Fed will do, although the last CPI number was quite positive. So the Fed might have a cut in there, but I think he's going to be very, very cautious about this. And I think if anything there, I think they'd rather want to hold off rather than lower, unless they're going to lower it in order to push it up later. But forward projections to say inflation is still an issue. This is only going to exacerbate the concern. So I think so. Now, the other thing that's going to happen is there'll be a change in global trade dynamics away from the States. We're looking, or Australia's looking for new markets to sell some of its minerals to. Europe, China, trying to renegotiate those deals, new deals. And I think that's what's going to happen. So we're going to be shifting away from the US into other markets where it's more lucrative for us and where we have existing trade areas. So I think that's good. And we've also got the monetary policy responses from the central banks. What are they going to do? And I think if I was a central banker at this stage, I would be saying, well, I think I've got to hold off here, or I'll lower rates in order to know that I've got to put them up. Because if you've got a 25% tariff on a good, who's going to pay that 25%? Obviously, it's the company that sells the good or imports the good. That goes to the government. But do they push it on to the consumer? And what does that mean in interest rates? So I think that to me is something, if anything, interest rates will go from what we've seen, which is dovish, and we've got a lot of reports this week, in terms of that. In terms of interest rate announcement, do we go from dovish to hawkish view? So quite important there. Obviously, corporate strategy adjustments, everyone in the boardrooms going around trying to put all those things together, trying to come up with different plays. But I do think at the end of the day, it'll be a direct economic direction away from the US and into other more friendlier economies.